All right, I think we're good to go, Case.
Good, good. Yeah, welcome everyone. I'm Casey Gibb. You probably met me before, some of you. With me today are Christina Hapanowicz and Bobby Hapanowicz. And our firm has been advising Verizon employees with their retirement planning now for over 20 years. And we especially look forward to the next 20. You're just a great group of folks to work with. We appreciate meeting with you always. I know we have some current folks we're working with, and we look forward to meeting with the new folks attending today. So welcome. Gosh, I see it's snowing out there. It's unbelievable. It's May 9th and it's snowing outside. So welcome. Thanks for attending. So our presentation today, it's titled Your Guide to the Verizon Benefits Center. We think you'll enjoy it. It's pretty informative. You can ask some questions at the end. There's a Q&A tab at the bottom of your screen. You can use that to ask your questions. Use the Q&A tab, not the chat tab, please. So again, welcome. And Christina, you want to take it away?
Yeah, thank you again, everyone, for joining. As Casey mentioned, the presentation today is meant to give you sort of a guide to the Verizon Benefits Center. We're really excited to present this to all of you. We've been working with Verizon Associates and Managers, as Casey mentioned, for quite a while now. And this presentation is a culmination of all of those experiences of calling the Benefits Center and working with the Benefits Center. And if there's one thing we've learned from all of those experiences, it's that the process of working with the Benefits Center isn't necessarily as straightforward as you may think. It's not as simple as picking up the phone, calling them, and signing a piece of paper. There are a lot of choices to make. There are a lot of questions that you should be asking, information to make sure that you're jotting down. And so we want to share this with you guys so that you can feel as prepared and as knowledgeable when you eventually go through this process of working with the Benefits Center to actually commence your retirement and commence your pension benefit. So what we're going to do today is take you through the three main phases that we like to think of them as throughout this entire process. So the first is you're still working for Verizon, and maybe retirement is a ways off for you and you're not really thinking about it right now. Maybe retirement is coming up pretty soon for you and it's something that's at the top of your mind more frequently. That second phase is when you are ready to retire, you are ready to commence your benefits. And the third phase is after you are retired, no longer working for Verizon, how can you still use the Benefits Center to your advantage and as a resource to you? And yes, just to mention, if you have questions throughout the presentation, you don't need to wait until the end of the presentation to type in your questions. Please feel free to type in your questions in that Q&A box throughout the presentation as you may think of something. And with that, I'll pass it off to Bobby and he can get us started.
Thanks, Chris. Hi, everybody. Thanks again for attending. And as Christina and Casey were saying, we think a great place to start would be to talk about the different aspects of the pension benefit that associates should be monitoring in the years and months leading up to retirement. And one of the most important aspects of the pension is the pension interest rates, and more to the point, how those affect your pension lump sum benefits. So I'm sure everybody's aware that you have two options in electing your pension. You can take the annuity option or you could take the lump sum. And particularly for those who are taking the lump sum benefit, even if you're only considering it at this point, it can be especially important to monitor those pension interest rates.
Mm-hmm. Yeah, it's so true. And something that we always like to make clear is that really important decision between your annuity benefit and your lump sum benefit. You don't need to make that decision right now. In fact, you don't need to make it until you actually decide to retire and commence your benefit. But what we do like to encourage is that even if retirement is a long ways away from today for you, gathering as much information as possible is so important to help you make that informed decision, that really important decision that's going to work within your overall retirement and financial and cash flow plan. So the more information you can gather over the years, the more prepared and knowledgeable you will be to make this important decision. And again, this is such this is such an important decision. We're staying, more at the high level right now when we're talking about monitoring interest rates and choosing between those two options. Stay tuned because we're going to be doing another webinar later this year that solely focuses on that decision between your annuity and your pension lump sum. So stay tuned for that.
That's right, Chris. We're looking forward to that. But just as a reminder, your pension lump sum is determined by your age, interest rates, and for the associates, your years of service. But it's really interest rates that affect your pension lump sum value more than any other factor, and really should be monitored throughout your career, but especially as you get closer to that retirement date, within 1 to 2 years, within that year of retirement. It's very critical to monitor the rates.
Absolutely.
Yeah, that's right, Casey. As Casey was mentioning, the interest rates are a very important part in calculating the pension lump sum, and they play a direct role in what that lump sum value will look like. And you can see from this image here that it's actually an inverse relationship between interest rates and lump sums. And by that, I mean, as interest rates go down, pension lump sums will increase in value. And the reverse is true too. When interest rates rise, pension lump sums will decrease in value. But the scenario that's depicted here with low interest rates actually reflects what is happening now. And this is a trend that's been in effect for several decades.
That's right, Bobby. The decline in interest rates, actually over the last 40 years, we reached historic high rates back in the early 80s. Remember that, down to almost 0% rates today. So it's just been a drastic drop in rates, causing these lump sum values to increase significantly over the years. Mm-hmm. That's why it's probably the most popular distribution option among the associates and the managers, taking the lump sum option.
That's right, Casey, and that highlights why it's so important to monitor your interest rates, and not only the months but the years leading up to retirement as well. And this chart here tries to depict the dollar effect that a change in interest rates can have. You could see at the bottom here, it's 6% interest rates. In this particular example, the lump sum value is nearing $250,000. And as interest rates decrease to 2%, the lump sum value approaches $400,000. So again, this just shows the importance of monitoring these interest rates. That lower interest rate, again, is closer to what we're seeing today. As Casey mentioned, with interest rates being near zero right now, that's a result of the Federal Reserve dropping their interest rate in order to keep the economy going during this coronavirus crisis that we're going through right now. And your pension interest rates have followed suit as well. For West Associates, for example, the PBGC rate is now 0%, and the GAT rate is under 2% at 1.97%. And again, these rates are historical in nature and quite rare to see.
Mm-hmm. Yes, Bobby, I think this is a great example. It's a 55-year-old Verizon employee with probably 20 years of service, but it clearly shows the inverse relationship of interest rates and lump sum values. And as you said, Bobby, that GAT rate is now under 2. The PBGC rate is at 0%. So just drastic drop in these rates over the last several years.
Certainly a lot to, there's certainly information to take advantage of here in regards to monitoring your interest rates leading up to retirement. And of course, one of the best ways to do that is to call the Benefits Center and ask for that lump sum estimate. And there are a couple of things that we find to be very important when calling the Benefits Center to make sure that expectations of what the next steps are clear. And one is to make sure that your representative confirms your contact information and employment status. And the second one is actually something that you can do when you're on the phone with the Benefits Center. If we're on the phone with you as well, we will certainly do this as well, but document the name of the representative you are speaking with, as well as the date and time of the call.
Mm-hmm. Yeah, this is so important. We can't stress this enough. Something that seems as simple as documenting and taking notes of your conversations can actually serve to be a really important factor if and when you need to look back on previous conversations with the Benefits Center. A lot of the time your communications with the Benefits Center can last a span of, even up to a year, especially as you get closer and closer to your retirement, you're probably going to be communicating with them more. And being able to look back on your own notes of your conversations with the Benefits Center can prove really crucial and really beneficial. When we work with Verizon Associates and managers, we take our own set of notes on those conversations as well. So we encourage you to get your advisor involved if you are working with one. If you're working with us, of course, we do get involved in that process. And that way you're going to have that second set of eyes, that second set of notes and history to look back on.
That's right, Chris. I'm just thinking about a recent situation last year. We had to retrieve the recorded conversation with a Verizon employee who was retiring. It turned out to be to the client's advantage, resulting in an additional lump sum distribution of several $1,000s. So, luckily we knew who we spoke to, which representative, the date and the time of the call. We had the conversation pulled, and it turned out to be to our client's advantage.
Yeah, it's so important. It could mean money left on the table when, a detail is missed. So very important. Absolutely.
Yeah, absolutely. And another consideration when calling the Benefits Center, especially if you are calling for a benefit that needs to be manually calculated, is to confirm the date it's going to be received. This is important because sometimes these things just take longer than they should. The Benefits Center will typically tell you these take about 2 weeks. Oftentimes they take a lot more than that. So in order to make sure you get your estimate in the appropriate amount of time, especially if the nature of your request is time sensitive, is to make sure the representative understands that your request should be expedited.
Mm-hmm.
That's right, Bobby. Yeah, usually a manual calculation is rare, but it's needed in some cases where there's been a break in service, such as for a maternity leave or some other leave of absence. But the point is, they can take longer than a month unless you specify you need it immediately within a 2-week period.
Yep. So moving on to this next bullet point that you can see here on this slide, we really recommend that at least annually, so at least once a year, you take a look at the beneficiaries listed on your pension benefit. Now, when we work with our clients, we encourage them to check their beneficiaries on all of their retirement accounts. So their rollover IRAs, any beneficiary IRAs, Roth IRAs, their 401k. And we believe that your pension benefit should be included in that list of annual checks as well, for a couple of reasons. The first is you want to make sure that the Benefits Center has the correct and accurate information on file. The second is, as time goes on, things may change and you might want to update your beneficiaries. And having this annual check is a great prompt to do so if you choose to do so. For those still working for Verizon, if you have any questions about the benefit to your beneficiaries while you are still working for Verizon, what you can do is take a look at the pension plan summary, plan description, and that will have all the information in there for you. If you'd like help in deciphering that, we're absolutely happy to do that. Just give us a call. But that's where all that information is going to be.
Absolutely. And this last bullet point here might not apply to everybody, but if it applies to you, it's certainly a very important one. So we'll go over it briefly. If you happen to go through a divorce and through that divorce, a qualified domestic relations order document was completed, it's important to make sure that document is on file at the Benefits Center as well. Again, this will be very important once the benefit is elected to make sure that document is on file. So be sure to do so.
Okay, so we're going to talk about now this second phase that I was referring to earlier in the beginning of this presentation. You are ready to retire. You are ready to commence your pension benefit. And there are certain steps to take when you're ready to move on to this next phase. So we can go to this next slide and we can get into the details of those. So the first step is, of course, to call the Benefits Center. And something really important here is in this phase of being ready to retire and ready to commence your benefit, You want to make sure that you're speaking with a pension specialist. And that's different from what we were talking about when you call the benefit center before, when you can speak with an associate. Here, you want to make sure you're talking with a pension specialist. What is a pension specialist? Well, this person will be assigned to you and be your liaison, in a sense, to the benefit center and to the benefit commencement process. So you will have their full name and their phone number and direct extension, and they will be your point of contact moving forward as you actually commence your benefit.
Right, that specialist is also going to ask for your commencement date, the date you want to begin your pension. And that date is really important since it determines the interest rate used to calculate your pension. So you want to choose that commencement date with care and make sure you're making the right election.
Yeah. Casey, isn't there a story you can tell about that actually with that, potential mix up or, incorrect
Right.
commencement date?
Yeah, it was a case probably a few years ago. The difference in the lump sum cash out was significant, about $30,000. After we advised the associate to choose an April commencement date rather than a March date. And what happened was that the rates declined substantially from the first quarter into the second quarter. But with a lower rate in the second quarter, his cash out increased significantly.
It's just an incredible story. I mean, again, this is another example that we saw firsthand. I remember, sitting in on that phone call, and again, money left on the table. Just, it could have been left on the table just from a simple mix-up in a date that you would put on a form. So we can't stress enough the importance of paying attention to those details and getting that second set of eyes involved, and advocating for yourself as you're going through this process.
Absolutely,
Right.
Chris.
The pension specialist is just going to take your order.
Mm-hmm.
You have to make sure it's the right order.
Yeah.
Exactly.
Yeah, a lot of details to make sure that you get right throughout this process. One of the most important steps is when you receive the pension election form and fill out all these details that Christina and Casey are discussing. And, when your pension specialist mails you that form, well, the typical practice is for them to email it to you, but we actually find in our experience it's easiest if it's mailed. The reason being is this form is very long. It's well over 100 pages. And of those 100 pages, there's only several that are all interspersed within the document that you actually need to get signed and completed and turned back to the benefit center. And if you're trying to scroll through those on one computer monitor, it becomes very cumbersome, very difficult to scroll through, make sure you're doing everything the right way. We find it's easier to request that it's mailed to you. You can quickly discard the pages that you don't need. You can make copies of the pages that you do need for your records, and it allows you to just look at everything in front of you and do it in a more organized fashion. And moving on to the next bullet point here, I did mention a little bit about making copies of that pension election form, and that does lead us into this one. We think it's a very important step to make copies of this pension form actually before you complete it. The reason being is that the benefit center is very exacting in the standards that they have when you complete this form. And the reason being is they want to make sure that the benefit is going to the right person and in the manner that you want it to go to you in. So it can be very, if there's scratches out on the document, if there's typos, they're going to actually have to resend you a new form, and this can add weeks or months to the process. So we think it is very important to make sure that you make multiple copies and review it, of course, with your specialist, review it yourself, and of course, if we're helping you, we'll review it with you as well. Get as many sets of eyes as possible as you can on this election form.
That's right, Bobby. Everything has to be just exact. So we'll review the completed forms with your pension specialist by phone, then mail them by overnight delivery to the benefit center. Probably about 5 weeks later, or 5 business days later, we'll call the specialist to confirm receipt of the forms and then also to confirm the pension start date. So we're always confirming, verifying, and just tracking things to the very end.
So this last phase, you are happily retired from Verizon, no longer working there. How can you and how should you still use the Benefits Center as a resource to you? And there are actually a couple of different scenarios that we're going to talk about today where we think you should be using the Benefits Center. So the first is if you do elect the annuity benefit over the lump sum, any sort of service-related issue regarding that annuity benefit, the Benefits Center is going to be your first call. Just a couple of examples that you can see on the slide. So if you change your bank account, if you need to change the beneficiary, if you've moved and you are receiving your monthly income via check, give them a call. They're the first, they are the first number to call relating to any of those issues. And the second main reason or factor is insurance benefits. So if you have life insurance or medical benefits through Verizon, the Benefits Center is your first stop for any service-related issues regarding those insurance benefits. And that concludes our presentation. I'm going to pass it off to Casey before we get into some Q&A. What I will say is we really recommend and encourage you to get your advisor involved in this process. If you're not already working with us and if you don't have an advisor, please do feel free to call us and use us as a resource. That's a no strings attached offer. We've seen, this process, we've gone through this process so many times before, and we really know what to look out for. So please don't hesitate to reach out to us when you do go through that commencement process, especially, and we will be here to help you. And I see we've got some questions, so I'll pass it off to Casey before we get into those.
Okay. Yeah, just in conclusion, one of our favorite quotes at the firm is, "A well thought out and executed plan stands the test of time." So at our firm, we're all about planning first, helping you answer the question, am I on track? Or are you saving enough for retirement? Will you have a successful, enjoyable retirement? So it's all about planning. Mm-hmm. And as we stated at the beginning, our firm has been helping the Verizon people plan their retirement for over 20 years now.
So we've got some really great questions from our audience, so I'll get into them. The first one is, how is your pension taxed? Casey, do you want to take that one?
If you take just the monthly annuity?
Well, let's do both scenarios. So let's first say if this person or if you in general take the annuity, how is that taxed?
Oh, it depends on the state. It could be Pennsylvania tax, but yeah, it's a taxable situation. It's federally taxed. Probably your locality is not going to tax it, but federal tax, and most likely, depending upon your state of residence, could be a PA tax as well.
Okay. So it's taxed like ordinary income, right?
Pretty much, yeah.
Yeah.
And with that pension lump sum, if I could add really quickly, again, the pension is ordinary income. If you were to roll the lump sum pension benefit into a traditional account, you would pay taxes on all of that at one time, and that could bump you into a higher tax bracket. There's a potential for that to happen. Another strategy is to have an IRA account ready to receive your pension lump sum rollover, and then you take income as you need it throughout your retirement, and in doing so, you can keep your tax bracket lower and ultimately pay less in taxes.
Yep, great point, Bobby. I would say the overwhelming majority, 99.9% of folks who work with us who have taken that lump sum benefit, they do roll it over into their IRA account that they have set up prior to the pension commencement process for exactly that reason. It defers the taxes. And then, what we do is we approach that IRA and income from that IRA as one component of your overall financial and cash flow plan. So, just to summarize our answer to this first question, if you're taking an annuity benefit and it's every month, well, that annual income is going to be taxed pretty much like ordinary income. If you're taking a pension lump sum benefit, then how it's taxed is going to depend on where you put that money. If you do what most people do, which is put it into that retirement account, then you're going to defer those taxes until you actually take money out of that retirement account. And distributions from a retirement account are treated as ordinary income as well.
Yeah, and as I said earlier, Chris, about over 90% of the associates and managers are taking the rollover distribution option.
Yeah, yeah.
Especially recently, yeah.
Okay, great question. Okay, so I have a second question for you guys. Is a self-service pension estimate on the Benefits Connection website as accurate as a call to the Benefits Center? Is there a difference? Casey, do you want to start off with that?
Yeah, I haven't seen a wide difference. Usually it's pretty accurate, but calling to the Benefits Center, I think just make sure that you've entered the right information. So yeah, it doesn't hurt to call the Benefits Center just as a backup, just to confirm. But usually I've seen folks I work with, we do an estimate online, then call the Benefits Center, and it's pretty close. But nothing's guaranteed until you get an estimate from the Benefits Center sent to you.
Great question. Okay, next question. I have been divorced since 1989, long before my starting with the company. Is this an issue? So I think, that answer is really, it's probably dependent on the divorce agreement. You're going to want to talk to your divorce attorney and look to that to answer that question. Now, your advisor or we can help you decipher that answer, but you're always going to want to confirm that with your attorney and see what that divorce agreement looks like about, any future income that is earned after a divorce is settled. Okay, another question. If I take a lump sum, what happens when I die?
Well, again, the lump sum is being rolled over usually into an IRA account. The IRA account you name beneficiaries to. So if you die and funds are still in that IRA account, the funds would go to the beneficiaries you named.
Great. Yeah, great question. I mean, yes, it's really a lump sum. That money then becomes yours officially. It's on your balance sheet. So what happens to it when you pass is totally dependent on what you want your financial legacy to look like and who you want your heirs to be, who you want your beneficiaries to be. Okay, so just a couple more questions. How frequently do interest rates change?
Well, that depends. For the East Associates, they change every calendar quarter. So currently on the Verizon Benefits website, you have the April, May, June rates. And for managers and West Associates, the rates change on a monthly basis. So just a little bit different. Associates on the East side are quarterly, West Associates and managers are on a monthly basis.
Yeah. And everyone who's listening in right now, you've probably received pension memos from us, but if not, please let us know. We'll get them out to you. We send pension rate update memos to East Associates, West Associates, and managers as those pension rates are updated. We send those out periodically like clockwork. So if you're not already getting them, feel free to let me know or let any of us know and we can get you on that distribution list. Okay, another question. Is now a good time to retire with interest rates being so low to take advantage of a higher lump sum pension? That's a great question, and I think the answer is multifaceted. It really depends on your situation individually. So the really big decision to retire should be based off of many more factors than just receiving a higher lump sum amount as your pension benefit. You need to take into account, okay, if I retire earlier than what I was planning on doing, what income am I missing out on? What salary am I missing out on? Will I be able to effectively support my income needs and handle my expense components throughout my retirement? So there's a lot of different components to take into consideration when you're making such a big decision.
If I could add to that a little bit,
Mm-hmm.
we find that pension interest rates become a bigger component in the timing of retirement the closer you get to retirement. And by that, I mean, if you were planning on retiring in July and you were looking at interest rates and you realized that the interest rates in June would be more favorable for your lump sum, then you might bump up your retirement for a month. You're not giving up too much salary. You've probably already made the decision at this point, looking at all the numbers, looking at your retirement plan that you are ready to retire. So bumping it up a month would make sense. However, if you're years out, it's unlikely that trade-off will match up when you're trading, a higher lump sum value for, the salary that you would have made. Years of service is another important component to your lump sum value of your pension. And typically, the longer you've worked for Verizon, the larger your pension lump sum will be as well. So that's another component to keep in mind as well.
Yeah.
Doesn't mean years away from retirement and the years leading up to retirement that you shouldn't be monitoring your pension lump sum values. This can be very important as you're making the decision between the lump sum and the annuity, looking at what is the favorable option to take, and this can impact your retirement planning. So it is still important to monitor lump sum values in the years leading up to retirement. However, interest rates tend to be a bigger portion of the decision the closer you are to retirement.
Mm-hmm. Yeah, great point.
Question though.
Yeah, that's a great question. Okay, it looks like we have one more question. When can I expect to receive my pension lump sum rollover check after I retire?
Yeah, that's always a good question. So it's based upon the 10th of the month. If the Benefits Center receives everything by the 10th of the month, for example, your pension election form and notification from Verizon that you've officially left the company, then your lump sum will be issued the first of the following month. So yeah, let's say you retired in April, you get everything to the Benefits Center by the May 10th, including notification you've left the company. Then the lump sum rollover check you receive that the week of June 1st.
Okay, great question. Okay, there are no other questions from our audience. If you do think of any other questions, you can see our emails and our phone number at the bottom of the screen. Feel free to call us anytime. We hope you do. We hope you can turn to us for any support or guidance regarding this really important decision and this really important process. I do see that a couple of you are joined via phone. So we're going to be sending out a recording of this presentation in a couple of days. So for those of you who did join via phone, or for those of you who joined through your computer and you want to take a look at it again, we're going to be sending out this recording, and that way you can have these slides in front of you. You can have our commentary in front of you to look back on. We actually got one more question, if you guys have another minute. It says, would I be able to change my residency to Florida, as I am currently a Pennsylvania resident, and then collect my lump sum pension benefit? I hear that the tax rate is better. Yes, the tax rate is better. To be able to change your residency to Florida, you have to prove that you spend more than 50%, even if it's 50.1%. You have to be able to prove that you are spending more time down there and actually residing there. So if the lines are a little blurred, then we recommend you take a hard look at that, talk with your tax advisor, talk with your CPA about that, and but before you claim residency down there. And the line should be really clear in terms of how much time you're actually down there. But yes, the taxes are more favorable.
Great question. Yeah.
Okay. Well, no other questions have been submitted. We really thank you guys for joining us this morning on a Saturday morning. let's see. And if you do have any other questions, like I said, please feel free to reach out to us. We hope you guys stay safe and warm. It's still snowing where I am, so I hope that things warm up for everybody over the next couple of days. And thanks again for joining us. We'll see you for the next webinar. Stay tuned.
Thanks, everyone.